Okay, guys, thanks everybody for joining. Today we are here for our Degenuary 1 year birthday event. Welcome to everybody, and thanks in advance for sticking with us to the end. You will want to do so as we have not only a couple of prizes to give away, we actually have a bunch of exciting stuff to tell you that's happening on our platform in the very near future. But yeah, overall, setting the stage for today. Just want to thank everybody who's been around on the journey over the last year, and anyone who's kind of joined more recently. We'd like to welcome you as well. We have a whole host of guests today that are going to be that have been part of our journey as well, and are going to be speaking a little bit about some of the work we've done together, as well as the things that they're focusing on. Now, to kick things off, we're going to have a little bit of a look at our strategies. We're going to have a kind of overview of where we've come from, and that's going to set the scene for where we're heading. Just as I mentioned, the alpha is going to be towards the end of this AMA, so yeah, you'll definitely want to stick around. At this point, we can give a little bit of an overview of where we have come from on the strategy side. So back a year ago, we started with less than 5 strategies. We actually now have over about 20 across 5 different chains. And we have total value locked of about 350 million. That's 42% of our total TVL. And that's generating 72% of the protocol earnings. Our strategy offering, we're across Ethereum, Polygon, Avalanche, Harmony more recently, and BSC as well. So we'd like to welcome our first guest, Apwine, who I will just invite to speak now. Apwine, are you there?
Hello, everyone. Yes, I'm here. This is Ulyss from Apwine.
Hi, Ulyss. Thanks a lot for coming on today to celebrate our. Yeah, absolutely. So, I think just to kick off the kind of discussion, it'd be great to get a little bit of context about what you guys are building at Apwine.
Yeah, absolutely. Maybe I can give a quick recap of what we're doing at Apwine. Apwine is one of the first protocols for future yield tokenization among other products that we're building, but this is the first. And so what does future yield tokenization enable? Basically, you arrive on the platform with your interest-bearing assets, so your IBTs, which generate yield, and you're able to deposit that onto Apwine to tokenize it, split it into principal tokens, which is your initial deposit, and your future yield tokens. So this will contain all the yield that's going to be generated over a fixed duration of time. So to give a concrete example of how this would work and what's the actual use case for this, we have, for example, integrated the StakeDAO token, the governance token on the platform. This was done through the first wine listing that we have. And this is like a governance process where the token holders can vote on the next platforms that are going to be added to Apwine. And so what will Apwine enable, tokenization next? So we have StakeDAO staking on Apwine, which means that you can go on Apwine with your XSDT and split it into PT XSDT and FYT XSDT. That means when you have your future yield tokens, you can sell them to get your yield in advance and at a fixed rate. So essentially, Apwine allows anyone to trade and hedge their future risk on future yield before it's even realized. So for the first integration, we had a StakeDAO, but we're working on more strategies with StakeDAO to integrate. And very recently, so as recently as 2 days ago, the community voted to integrate 2 new StakeDAO strategies. So in the next few days, we're going to have the passive Frax strategy from StakeDAO and also the passive USDC Aave on Polygon. So with this, you're going to be able to tokenize and trade your future yield. So for example, if the APY is 20%, you want to get a small discount, 19%, but you're getting it 3 months ahead of time, which enables you to reinvest it in other strategies and build complex strats that were not possible before.
Incredible. And for users who are just kind of only just coming across your products, like how would you kind of pitch this to them? Some ways that they can utilize this in their DeFi strategy.
Yeah, absolutely. So what we like to mention is that we're basically paying your salary in advance ahead of time. And that's basically the entire offering of the future yield tokenization. We're paying your salary ahead of time and at a fixed rate. So not only do you prevent the risk, but also since you get the yield upfront, you're able to reinvest into other strategies. You can even do compounding ahead of time. This is the yieldception strategy that we've come up with. So as a StakeDAO user, right now, if you're going, let me check, for example, on the Ethereum, Frax strategy, you're getting 14.12% on Ethereum, right, on your Frax. With Apwine, so in a few days, actually, you can go on the platform right now and do this with your SDT. But what I'm going to mention is going to be available in the next few days. You're going to come with your Frax, stake it into StakeDAO, into the strategy, and then get the strategy tokens back. You go on Apwine, deposit these assets, these strategy tokens, and then you can get your yield ahead of time. There are actually two different strategies. Either you can get a fixed rate, which will unlock in 3 months, which means that you're basically guaranteed to get that yield, but it's going to effectively be unlocked in 3 months. This is the principal token strategy. And then the other strategy is get your yield ahead of time. So right now, I'm going to give you, instead of 14%, Apwine is going to give you 13%, with a small discount. But this is going to be ahead of time. So you're going to be able to reinvest that. Maybe you want to also try the staked ETH strategy on StakeDAO. So you're going to be able to take that yield and deposit it into another strategy.
Incredible. JB, are you? What are some other kind of potential usage cases for StakeDAO? Are you thinking about?
Yeah, I mean, so the original idea about StakeDAO was to jump very early into derivatives, so options, futures, exotic options, or hybrid options, like the market of traditional finance, trying to bring those different concepts into decentralized finance. And I think we were one of the early adopter of this vision. And so we've built, and I mean, I believe that Apwine is one of the probably one of the best. One of the biggest potential in the ecosystem, because it's been there for a couple of months, like start last year, and unrealized yield that you can sell in advance. This is something that will be able to plug in any ideas or any live project in the ecosystem, because everyone has, or any project in the ecosystem are offering APY. So you can basically tokenize this and then get the unrealized yield way before it gets into maturity. So the idea is like right now we have we're building we have like normal strategies such as conservative USD, Euro, but we also have built and almost reached 100 million. I think we have 80 million US dollars of options. What you could actually do, you could also plug Apwine on top of it. You could basically say on a weekly basis, because those options, they are 7 days European options. What you could do, you could have Apwine on top of it, and then people could actually, before get into maturity of the options on a Friday, well, you could actually sell and bet on you could short or long the APY, the premium of this option strategy. And I think that's a very cool potential for the DeFi market.
Yeah, totally agree.
How are you thinking that DeFi will evolve, with this kind of technology that you're working on, but also maybe a few other players are working on?
Yeah, totally. I mean, this is, of course, a broad question, and we're kind of trying to envision the future here. But future tokenization is only one of the first products that we're coming up with. Also, in the backlog, we have options, for example, the backlog, as you now mentioned, which will allow you to, short or long the APYs. So this brings an entire new derivatives layer to DeFi, which was not possible before. And since AP1 is a very low-level protocol, but with high-level features, it's also very modularable and extendable, which means that so many strategies that were previously unseen will be able to be built now on DeFi. So now I feel like on a general note, DeFi is becoming more and more complex for people who are not too much into finance, and we're building as we see every day. There's new innovation in DeFi, and it's mostly resulting in complex strategies that are being simplified by StakeDAO. And this is why StakeDAO has a very important place in DeFi, because it's simplifying access to these very complex strategies. And we could totally envision an AP1 strategy where StakeDAO leverages the low-level aspect of AP1 to generate fixed yield that was previously impossible to do, and make it simple through their UI.
Yeah, like for example, we want to on the avalanche arbitrage strategy. This strategy is only accessible if you have specific NFTs, and those NFTs are categorized into 3 different types. So you have the common, you have the rare, and you have the unique. The common one, you have you have like 100 of them on the market. The rare, 10, and the unique one. What they give you access to a percentage of the vault of this strategy. Arbitrage strategy is very difficult to predict how much arbitrage profit you can make on a weekly basis. So that's the reason why the strategy is capped to a certain level of like a maximum cap of deposit inside. And then depending on which NFT you have, then you can enter the strategy. So this is already like a multiple level of kind of like meta strategy, because first you can enter the strategy only if you have this NFT, and then you can stake some SDT and then capture percentage of the future profits of that strategy. But then what you could do, you could also plug on top of it APY, and then you have the ability, based on the position inside the strategy, to either sell in advance your yield because you believe that the arbitrage opportunity that this strategy will do for the next week is not as big as today because, for example, the market is not volatile. So then you end up with multiple different products that we can ourselves automate to short, long, leverage, or get more exposure to certain vertical of the DeFi market. And this is beautiful because you don't really need to understand how this concept, how the underlying technology works out to be able to use them in your advantage.
Yeah, totally agree. And I just want to say also to answer your initial question, DeFi is all about composability, right? And we're seeing more and more protocols that are very low level and that plug onto other protocols to work. Like we've seen like Convex, which has, its only purpose is to work on top of Curve, and it's working very well, right? But there are other protocols, for example, option protocols that allow you to plug onto others and offer things that were previously unseen. And so I think the analogy here would be to compare with what has been done in Web 2. Just want to step back a little bit. So in Web 2, you have these these small services, which are software as a service. So basically, it's a company that only serves one purpose. If we can think of examples, for example, you have a MailChimp, which allows you to send emails in a grouped and very efficient way, right? And then platforms came on top of that, which plug into these small services. And this is, kind of an analogy with what's happening in DeFi right now and in Web3, is that we have all of these smart contracts deployed on the blockchain, and that are basically companies by themselves, right? The smart contracts are, of course, managed by a team, by a governance, but they're accessible and usable by everyone who virtually has a crypto wallet. So I think DeFi is beautiful in that sense compared to traditional finance, where it's very hard to get access to certain products. For example, Robinhood is only available to US customers. So as a European citizen, I am not able to play with these kind of tools. I mean, there are other tools, but I'm not able to play with Robinhood, for example. So DeFi is beautiful in that sense because it allows for so much composability, and it's kind of like a piece of puzzle where projects are going to build on top of each other and all together grow together as they succeed. So yeah, that's a broad vision, but that's how I would share my thoughts on your question.
Yeah, it's a great answer. And I guess, kind of maybe sort of closing questions or closing thoughts here is, it's enormously challenging to build, some of these kind of new structured products. What are some of the challenges that you think we might see as this particular space kind of develops, with regards to like risk?
Yeah, absolutely. Yeah, I think there are multiple types of challenges on a personal human level and on a technical level. Maybe we can start with the human level. As a co-founder of Apwine, and we're all working very hard on this, and I've seen how much my health has been impacted. How much basically all my life has became Apwine, and this is something that maybe as a user or just in DeFi you don't realize, but all the people working behind all protocols and projects in general, especially in such a space that's moving extremely fast. It's using, of course, a lot of resources. And to kind of fix this, you always need to hire more people to join your team and to work with you. And yeah, I would say this is a challenge. This is definitely a challenge. Not only trying to find the human resources to help you, but also trying to manage your work life, which is not always possible when you're early in a project. Now on the technical level, I think in terms of UI UX, this is the part I'm leading with Jean, who is also attending the call. The challenge would be how to make complex products in DeFi, because some products are extremely complex. Like, it may seem easy on the outside, but they're working with very complex, math and very complex mechanisms. For example, Curve. I've read it again and again, but I still can't understand how the math work, and that's just because you can plug onto Curve without knowing the math behind it, and that's the beauty of DeFi. But how to make complex products simple without breaking the core functionality of it, and that's one of the challenges of making a UI and a UX that's very efficient for users to understand everything about your project, without them actually understanding what's happening behind, as much as a project owner you would. And I think that also that's what StakeDAO is doing extremely well. The UI is making it so simple for anyone to just hop in onto any strategy.
Amazing. Thank you. Thanks a lot, Ulyss. Really appreciate that. We're actually just going to move on to the next segment, but, tremendously excited to, kind of help you push, tokenized future yield and see what we can provide our users with. So thanks a lot for coming on.
Thank you so much for having me.
Thanks a lot.
Thank you so much, Julien. We welcome all the herd. We love the herd, and we're really looking forward to what our projects and our communities can do together. Thank you so much.
Incredible. Thank you. Now, I'd just like to invite AJ and Lola to speak at this point. Okay. So for our next segment, we're actually going to chat a little bit about our NFTs. As we were, to our knowledge, we were the first project to actually use NFTs in DeFi. JB, would you like to kind of kick things off there?
Yeah. So this concept of using NFTs, now the time has changed, and now we're seeing more project building on top of NFTs and having true utility. But back then, what we were trying to do, we were trying to see or unlock the potential of the NFT mechanism. So in traditional finance, you have like, for example, like bonds or think about a ticket that give you access to specific give you access to premium financial product because you are in a private banking or you are working in hedge fund or VC, and you have access to capital that can allow you to be part of a mechanism that will give you more valuable utility to your asset, whatever. Well, in DeFi, DeFi, when I was looking at the market and the NFT back then, it was about like a year and a half ago, 2 years ago. And then we started implementing it last year, is how can we use NFT to unlock specific products on the DeFi space. And so we, at the original UI of StakeDAO, we add liquidations, arbitrage, and different like exotic premium strategies. So we basically, like on the arbitrage side, we were able to jump into Avalanche, and the chain back then was not ready for us to operate at that scale on Avalanche. So now, like, we basically have a bot and mechanism to capture arbitrage opportunity on the Avalanche chain. But those arbitrage are not like a normal strategy where you deposit USDC on Aave or for capturing the lending fees, or on a curve for capturing the auto market maker fees, so the trading fees. Those arbitrage is really correlated to how the market evolve, but also how many players are playing inside this market. So sometimes you can capture a lot of arbitrage, and sometimes you get squeezed down by other competitors that are doing a better job than you. So what you need is a strategy that is capped to maximum level of deposit. And then what we did is like, okay, so if we have a strategy that is capped, we can actually use NFTs for people to join that strategy. So then we avoid a big whale. Imagine if we say, okay, this strategy is capped to $5 million US, and we can guarantee that having $5 million US, we can guarantee 100% of APY on that strategy for a year, meaning that we are pretty sure that we will do $5 million US net profits over a year, and it will distribute those rewards inside the strategy. So it's a strategy that is accessible only if you have an NFT. And this NFT can be in 3 different categories. You can have the common, the rare, and the unique, as I explained earlier in the call. And the way that we distributed those NFTs, we're actually, instead of selling them, except the unique one and some of the rare ones, we basically, people could claim those NFT for free depending on the activity that they provided on the platform. So first, imagine that you do like anything, you provide liquidity, potentially very soon, maybe something coming in this call later, you've been referring people using the referral program, or you use the marketplace, or you use some staking, you are inside the options, or you did some trades, because we also provide trading. Then what you do is like, we give you points, and then those points, based on the number of points that you have, you can mint for free an NFT. And this is proportional to the activity you've been doing on the platform. It's not necessarily to the amount of money that you provided or the amount of money you swap. It's really about like the activity that you provide on the platform, and you can mint this NFT for free. And then you can enter the strategy that at the moment, if you look at inside the premium strategy on the website, this strategy is currently giving you 122% on stable. I mean, the underlying asset, you need to lock SDT, but it's paying in frax USD. So you're really getting US dollars based on how much you can lock. And I mean, the NFT that you have access to can give you.
JB, I think we might have just you might have just cut out there for a second, but
it was. I think the first strategy that we've ever seen in the ecosystem that is actually using a meta based on NFTs, giving you access to a premium strategy that is capturing rewards from running arbitrage on Avalanche. And then depending on which NFT you have, you can capture a certain percentage inside the strategy.
Yeah, so I think it's what you're highlighting is one of the things there is that it's a loyalty reward, right? Which is kind of a whole new architecture in the space. And I think at this point it'd be good to invite AJ and Lola from Blackpool, good friends at Blackpool. Welcome, guys.
Hey, what's going on? Thanks for having us.
Hi.
Yeah, thanks a lot for being here. You guys are phenomenally sort of involved in the NFT space. And feel free to give a little bit of an intro to what you guys are doing at Blackpool.
Yeah, absolutely, of course. So we've kind of taken Julian's vision from DAO, but on the NFT front. So rather than just ERC20 tokens, it's all NFTs. So we're like the biggest actor in SoRare. So we've got $12-13 million worth of SoRare NFTs. One of the larger guilds in Axie, which is of course just blowing up in popularity. About 1,000 scholars that we have in our guild that we use across Axie and a few other games. And yeah, so now those are really the biggest games that we have and the biggest games that are out there in the NFT space. And yeah, we're focused on yield generating NFTs as well. Yeah, I think that kind of fits the narrative of DAO and DeFi in that we're not, buying JPEGs and PFPs and trying to flip them or sit on them and hope for price appreciation. We're here actively managing these NFTs and pulling out yield every single week that goes to the treasury and then ultimately is going to go as rewards every week to people staking the Blackpool token, which is a completely unique concept and nobody else is really doing it.
Yeah, and to add on top of what AJ is saying, so investment is also we want to de-risk a little bit, and there's the Blackpool lab, where we take all the research on the project. So we actively are researching the space, trying to find the new gems, and this is not just an approach where we want to invest everywhere. We also want to be really cautious and think about where we're going.
Yeah, and pretty similar to what Julian was saying about the staked out NFTs and how you can kind of be rewarded for your activity on the platform. I mean, Blackpool is also a DAO, and so baby step by baby step, we're trying to decentralize as many processes as we can. And one of the ones that we're starting to do now is we've just sort of launched the Blackpool Scouts, and so this is pulling together the power of the community and people who are following Blackpool and NFTs. And so it's a group of community researchers who are looking into all the next potential Axie and SoRare killers, essentially, like what's the next big thing? And so we've got maybe 20, 30 people in this group now. And so we haven't formally announced anything, but I mean, the idea could be in a group like this, like the more you contribute, the more you get. So if you keep contributing research and it leads to investments and this and that, then like you should certainly be rewarded, whether that be a NFT that we give you that gives you access to certain strategies or, airdropped of tokens or V tokens that could be yielding over time. But yeah, so like really copying a lot of the things from DAO, pulling together the power of the community and giving out unique rewards back for your efforts.
Amazing. And, as JB mentioned, we at DAO were kind of one of the first projects in the space to kind of really try and bring NFTs into DeFi. I guess an interesting question for you guys would be, I mean, I think right now it's kind of siloed in terms of NFTs being used in the gaming space, right? And within DeFi, there's a handful of projects, ourselves included. Are you seeing that this is going to change over time with regards to DeFi? How do you think NFTs are going to become more embedded in DeFi?
Yeah, some of the things that are happening now, it's really seems to be following the trajectory that the I don't know if we call it DeFi version 1 or what, but like with Aave and OK collateralized loans, and like that was one of the first DeFi products, and that's cool. I think that's going to is already in motion for NFTs as well. There's a couple of protocols out there, NFTFi and a few others that you're starting to be able to put in your NFTs as collateral and take out liquidity on them. So that's of course interesting and makes sense that that's one of the first products we're seeing. And then I think next we're going to see more what StakeDAO is doing. I think that Blackpool will be looking into this and trying to plug it as soon as possible to do options on top of the NFTs in our portfolio. So if you're somebody who thinks that Sorare is going to continue to outperform, and maybe you think we've seen a top in Axie, well, then you'll be able to come over to Blackpool. You can long Sorare, you could short Axie, right? And then you can make yield because of those calls that you're making. I think that's going to be really interesting for people, because how can you do that now? How can you short Axie? I mean, maybe take leverage against AXS and try to short it, but we'd rather make it simpler and more tangible, right? Doing it against the actual NFTs.
Incredible. Now, guys, for anyone who's just joined, I'd like to welcome you, but also remind you to stick around for the next, until the end of the event. We do have a handful of really exciting announcements to make, as well as distributing or announcing the winners of our competition. So do stick around. We do have something to announce on the NFT front while we're on this subject, but beyond that, we have a host of exciting announcements to make. AJ and Lola, thanks a lot for jumping on. AJ
if I can also add something,
yep.
like the collaboration between StakeDAO and Blackpool, how we could see that is first how to integrate Blackpool into StakeDAO. We could build the first ever strategy that is giving exposition to the NFT market. So, for example, with the release of the new token economics that will come into Blackpool, there could be like a strategy for people to go on StakeDAO and then get into the BPT. And basically, by buying BPT and staking inside this strategy, they are exposed to the entire verticals that Blackpool is operating. Blackpool is really the first ever quantitative hedge fund for the world of NFTs. And when I say quantitative hedge fund, it means that most of the people inside the Blackpool team are background in mathematics, analysis. So they are coming from big traditional company that can analyze the market using mathematics, using on-chain data. If you go to Blackpool, you will see like the quant section where you can see live information about Sorare. You can see live information about comets. There's the Axie vertical coming. You have it, as mentioned by AG and Lola. You have the lab that is making research about new coming KeyCast NFT project. So the Blackpool is actually immediately investing in those different projects from early stage, and then capturing those NFTs so they can build a guild, because there's a huge vertical of guild inside Blackpool. About 1,000 people are working for Blackpool to operate those different verticals. You have an entire academy teaching how to jump into the world of NFTs, how to build your own game of NFTs. And also, if you need questions about your project or your tokenomics, then you have people that immediately reach out to, they go to the website and they reach out to Blackpool, and Blackpool can help them scale their game, think about new tokenomics. So you have an academy. You also have a Blackpool studio. They do, I think on a weekly basis, they have an entire a show online talking about either football or Avegochi and different verticals, whether it's in real estate, so the metaverse, or it's in gaming. There will be also like in arts, like different verticals. So it's a huge team. It's about like 30 people that are working across many different verticals. And it's fascinating because by getting into Blackpool, by buying the having access to the BPT, the token, you're basically getting exposed to the entire vertical that Blackpool is operating. You can take a look also on I think it's the page of the Academy, or you will see like all the potential projects that will join Blackpool hedge fund.
Yeah, I guess we didn't touch on that. That it's not limited to gaming. That just happens to be the area where NFTs have really taken off, and the application makes sense. But I mean, Blackpool is not a gaming guild. We have that as one function, but really, like, we also are investing in music. So we have owned some NFTs, some really rare ones from Blau, the EDM artist, and so those are starting to become yield generating, and we're getting a piece of his royalties from his music streaming. So we could have an entire Blackpool record label, if you will, right? And we use our quant in our models to trade those, buy them before, what are the signals before an artist gets hot, right? And buy them when it's cheap, and then sell when they've peaked, and collect the royalties in between. And real estate and everything else that operates in the real world is going to come to Web3 via NFTs. So really, Blackpool, like we're saying, is just a hedge fund, and we're just going to find ways to make money.
Yeah, so we could get like the strategy inside Stake DAO for locking BPT and then having access to the NFT world. And at the same time, we could also like build on Stake DAO options that will build some like you can, as AG mentioned. That's why the collaboration is really nice, because you can also like list some options on the dashboard that will either predict the behavior of a certain vertical, like Axie generating more revenue over time than Sorare, or because Sandbox announced a new raise, then it will pump, and there will be more people buying lands over there, and like all those different things are you can build them in the NFT world.
Exactly. And maybe it'll just be fun to give like a tangible example here. So like my background was I was working at maybe this is mostly a European audience, so I'm not sure if you guys know Carvana, but it's like a huge Fortune 500 company in the US now that is a used car retailer, but it's completely online. And the funny thing is, like, so I started there like one of the first 50 employees, and I went in to be one of the buyers of their inventory. So we were to go into the market of used cars and acquire the inventory and then resell it online to customers. Now, that started off extremely slow and very manual, and almost nobody else was doing this. But I helped build the team from about 3 people to over 40 in 2 years. And we went from buying like maybe 100 cars a month to like 10,000. And it was all through automation. And we've actually since then brought on one of the data scientists who helped build this with me. And so, we went from an area that didn't exist, buying and selling cars online. People told us that was insane. And we went from very manual processes, very low volume, to completely automated processes with very light touch that we would go in and just make sure everything was working, and automated, and completely changed the way people see car buying now. Now that you buy a car online, it's completely normal. I mean, Carvana is now selling millions of cars a year. And anyways, that's why I'm saying it's not limited to gaming or to music or any of these. We just take that same model of analyzing the market and automating everything and turning out a profit on the other end. So that's what we're looking to do.
Okay, guys, thanks a lot for coming on. It's been great to get your insight, on the NFT side of things. You guys probably 2 of the most knowledgeable people in the space. I'd be willing to wager. At this juncture, we'd like to invite Kila from QiDAO to jump on to speak. QiDAO, I'm just going to send you an invite right now. Yeah, Kila, sorry, I just sent you an invite. So just to give a bit of context, one of the big things that we do at Stake DAO, other than our strategy offering, our options, across those verticals, is our staking. Now, JB, this is something that is very near and dear to your heart. Maybe do you want to give a little bit of background on how you became interested in that?
In the space of staking or
staking, yeah.
I mean, I got involved in staking when I was doing staking as a service, so validators. Back then, I think it was like in the early before 2017 or during 2017, I don't remember. But that was like the network for called Cosmos, and you could do they call it a game of stake, and you could operate a validator. And then for a year and a half, many different protocols came out to offer the same kind of like the same vision of proof of stake. And then you could operate, and then by operating in the future earn some asset. But the reality is, like, for a year and a half, we were all spending a lot of money on servers and never earned a penny. But then after the ICO boom, yeah, in 2017, then the market. So it was way before 2017, and then in 2017 the market went crazy. So then we 2 years after, like for example, Tezos, Cosmos, Polkadot, and all the different projects, then got this concept of asset that you could stake directly inside the protocol to earn a percentage of the inflation rate of the network. And then you add protocol like LivePeer that released there. I think LivePeer was probably one of the first one. People tend to say it's Synthetics that released this concept of staking to earn performance fees or earn a portion of the inflation. But I think the first one was actually LivePeer. LivePeer released you could validate and then earn something like 70%, 60% back then, and 80%. And people were like, the entire community of blockchain was saying this was a scam and was a fraud because of very high yield. Well, now, today, the entire DeFi is offering like crazy yield. And you also, like, for example, Olympus, they're offering like a 3 million% APY and all different things. But yeah, that's how I start. And then over time, I think like the more we are evolving in the ecosystem of DeFi, the faster things are progressing. Because first, the knowledge of building things in DeFi is spreading among many, many more people, but also the toolings to access those different products are actually way easier. Back then, you didn't have a wallet, so MetaMask was not there. You didn't have SDKs, or you didn't have like now you have like a different like Tinderly or stuff that you can analyze the different transactions. So it was way more difficult. Now today, people don't actually spend time to find a way to build to find the best tool. The toolings are already there, so that's why you can build faster and better. And then you end up with all the different mechanisms of staking. And then I think so. That was the first wave, protocol building, staking mechanism for running validators. And then you add a protocol that you could stake their native asset, for example, LivePeer, Synthetics, and then other few protocols. And then the big change was like a year and a half ago or 2 years. Year and a half ago, when then Curve released the VCRV model, where now it's not only about staking, there's a concept of timing. So the longer you stake, the bigger boost you have, and then you can operate many different level of meta behaviors in a DeFi space. So for example, then you have this concept of governance, bribing, voting, and then we have now staking came to the stage where it entered the lobbying mechanism, because the more you stake and the more voting power you have, and then you enter this kind of lobbying and mechanism, which is fascinating.
Yeah, so I think the interesting thing is maybe a lot of people haven't actually discovered staking as a service, but little kind of fact there, it's actually providing about 55% of our current TVL, and I think that the staking as a service is kind of core to our DNA is kind of a multi-chain platform. We're really trying to bring the best of every platform into one space and kind of bring that, into one kind of.
We have like 300. I think we have 300 million US dollars on Avalanche. We have something like 300 million on Solana. We operate Harmony, like LivePeer, Elrond, many different other protocols that we do. And the idea is really to be staked down, to have access to each of those different level of products in the DeFi space. So from the very bottom, the protocol, because without protocol you don't have products. I mean the blockchain basically, but also like a native project that are running their own blockchain. So you provide validations, you have access to the voting power on the protocol level, then you build strategies. That's what we also offering, like USD, Euro strategies. And then on top of that, you build DeFi product. What I call strategies are also DeFi product, but they're kind of like very basic. But then you can enter on top of it, you can use your strategies to unlock additional products. Like we mentioned, the NFTs, but we also have the options, the futures, the trading. So it's really an entire, I used to call it like Disneyland, but where you have all the different things that you see, they are all connecting between each other, but you don't necessarily see them. But by staking into Avalanche, staking into Solana, or staking into Elrond, the idea is later on, the more value you bring, you can, by staking inside, you will unlock specific products. For example, like you will receive an NFT, or you receive additional rewards, or you will have access to a specific a premium feature because you add value across those different layers of DeFi products.
Yeah, absolutely. And I think at that point, it'd be good to highlight that we're pushing across multiple chains. We're bringing everything into one platform. Polygon is one chain that we see a lot of potential in. At that point, we'd like to welcome Keela from QiDAO.
Hey, how's it going, everyone?
You're good, man.
Thanks for jumping on today. We'd love to hear a little bit of an intro about QiDAO, what you guys are building.
Yeah, absolutely. Just like a short little intro about QiDAO is we allow you to use your crypto assets to take stablecoin loans against your crypto assets. So basically, you can use the value of your crypto or your LPs and lock them up, take a loan against it, use that loan for whatever you want. That loan is in the form of a stablecoin. That stablecoin is and that's the quick and dirty version of really what QiDAO is. Basically just unlocking liquidity from the assets that you currently have.
So yeah, I think it's a really kind of important mission. I think one of the things that maybe people haven't talked about enough within the DeFi space is just the pure challenge of building solutions across a bunch of chains. Keela, it'd be interesting to hear your perspective on this as a Polygon native project.
Yeah, absolutely. So we started on Polygon. We grew quite quickly there. We became like this top stable coin over on Polygon. But we knew that we needed to kind of go cross chain to continue to grow TVL, reach new audiences, or get new partners, all that kind of stuff. What we realized really quickly is if you do not have a solid cross chain strategy, you're quite literally going to be fucked for the future. What you might see, for example, is if you look at Saber on Solana, for example, it's one of the largest DEX on Solana. If you look at the tokens there, you're going to see a lot of fragmented liquidity in terms of tokens. You're going to see different versions of USDC, different versions of USDT, different versions of all these different tokens, which provides then fragmentation of liquidity, which means you're not going to have solid or deep liquidity with any of those tokens, and it's largely because when people are bridging over those tokens, they're using kind of mint and burn bridges. When you're using those mint and burn bridges, you're locking up tokens on one side, and then that bridge is minting their own version of a token on the other side. Where this becomes really an issue is when you're trying to partner with other protocols cross chain. Like, what version of your token do you want to use? Like, do you want to use one chain's or one bridge's token as your main token for that chain? How do you choose that bridge? For example, if you choose a bridge and that bridge goes to shit, well, then you're kind of building your house on a bridge, and you should never build your house on a bridge. You're kind of fucked there. So what we realized pretty quickly in terms of going cross chain is that we need to be able to control the liquidity and the tokens over on each chain. And so what we did to kind of help combat the fragmentation issue is we created hubs on each chain. So, for example, if you're going from Polygon to Avalanche, we have these hubs where you can take any version of approved bridges bring it over to the hub. You can swap it for our official version of for that chain. So that way, all of our partners, all the farms, they're going to be using our approved version of for any kind of yield farms, any kind of partnerships that we do. And so that was one of the ways that we tried to combat that liquidity fragmentation issue. Then unless if you have questions about that, I can kind of dive in deeper, but there's a lot of other challenges going cross chain that I can dive into as well.
Yeah, definitely. It would also be great to hear from Evgeny from Zerion, who we have on the call as well. I've just sent you an invite to speak if you'd like to jump on. JB, what do you think are some of the biggest challenges around building, cross-chain products?
I mean, what we've seen over the past few months is before there was only activity on mainnet, and people were kind of like at the beginning were kind of accepting the high fees and paying like high gas cost, and then this was like about 2 years ago, and then a year ago we're getting like more chain activity, and so now people as mentioned, they are now like getting into bridges and waiting for 15 minutes, waiting for an hour, or like coming back to the chain after, or going to centralized exchanges to be able to send asset another chain because they are either chasing APY, or they want to have access to specific features such as the NFT on StakeDAO, for example. But this is very time consuming, and as a user, DeFi is already complex enough to. It looks like even if DeFi was not complex enough, we just added like over the past few years, the entire community has been saying, okay, UX of using DeFi and blockchain is too complex. Well, now we just had another layer of complexity where you need to know which bridge to use and how to go to a specific chain and how to capture those different products. So we by 10 factor an exponential way, we basically increasing the complexity across all different products. I think what the real killer that we are entering or people are building and what we're trying to solve at StakeDAO is how can we use different chains without knowing that you're actually using different chains. And I think this is really where the DeFi is moving. It will be like you're using using an option strategy, or using a future, or using some perpetuals, or using like a conservative euro strategy yielding at 20%. But maybe all those different products are on different chains, but yourself as a user, you don't even know that they are sitting on different chains. And when you want to move asset between those different products, you don't even know you're using bridges. And this will be the next, is how can we build a nice UX and UI in order for the user that you don't need to understand the underlying technology to be able to use the different products.
Yeah, 100% agree. That's kind of like the ideal scenario, and I think that's kind of where the space is heading. We're not like we're clearly not there yet, where it's still kind of difficult for projects and also just individuals going cross chain. And sorry about I'm not sure what exactly happened or where I cut off when I was chatting about fragmentation of liquidity cross chain. But I'm not sure if you wanted me to continue there, or if.
Well, I think just at that point, I'd just like to invite Zerion as well, who powers some of our valuable backend to speak. So it'd be really great for you to give an intro.
Sure thing. Hi, everyone. Sorry for joining from the Zerion account. It's Evgeny speaking, the CEO of the company. On that point, what Julian just was talking about, I can essentially fully agree. And this is the way how we have been approaching that. I think we're a bit too early to completely move to the cross-chain experience from the UX level. But we've started kind of on this process. So we are now, I don't know if you've seen that, but we've recently integrated Mover as a bridge aggregator. So essentially users don't need to worry about selecting the bridge. But then the future, to me, it looks exactly as Julian described, is that when users actually don't really know don't have to know which chain they're actually using, and they can, ape into any kind of asset by just looking at the asset and get instant exposure to that. So that's my take.
Yeah, and what have been some of the challenges for you guys of building, cross-chain products?
To us, I think it's a bit more. It's actually easier, I would say, than for the protocols, because for us, we mainly exist on the aggregation layer. So we look at we essentially try to support as many chains as possible. And I think the only complexity that we have faced for us is with the smart contracts. Same with like everyone, but our smart contracts are stateless, and that kind of gives us an easier move in terms of migrating to other chains. But from the UX standpoint, I think that's the biggest one, and essentially trying to decide what chain we should be onboarding new users on. So these sorts of challenges are the most pressing ones to us.
Yeah, JB, is there anything you want to touch on there?
I mean, for me, I'm a big fan of Zerion, and we've been working together since day one, and there's a huge part of Zerion inside Stake DAO when you also have access to the dashboard and the analytics. So whatever Zerion is building, and we'll be trying to build on top of it, because I think this is a pretty amazing platform, and it's been a fantastic journey so far. So we'll continue doing this, and the Mover network system for bridges. This is definitely something that we've been looking into, and we'll like to integrate inside Stake DAO. But Stake DAO, obviously, this is probably coming in a later stage of this AMA. But we've been rebuilding the kind of like the UX, user experience, and the UI, and how we can solve this really complex DeFi caveats that bridges, moving asset, jumping between different products across different chains, and all the different things. This is something that we've been actively and intensively looking into.
Great, thanks a lot. Thanks a lot for coming on. We really appreciate having you guys as one of our most important infrastructure partners.
Sure, we actually love to have you as one of the infrastructure partners, and hope our APIs will serve you well.
Definitely.
Thanks a lot, man. So yeah, at this point, we'd like to invite Leraf from Lobis. Are you around, Leraf? If you could just send a request to speak, that would be great. Yeah, sorry, I'll just. Space is a bit of a nightmare to navigate sometimes. So, we'd like to kind of move on to some of the milestones we've hit in terms of our community. I think a year ago, we had a few hundred or 1,000 or something on Twitter. Today we have around 22,000 people, about 3,000 in our Telegram, and our Discord as well. I think at this point, I'd just like to say, massive thank you to everyone who has lurked around in some of our AMAs or just given us a follow. And a huge thank you to anyone who's created content about StakeDAO. I think the most important thing here is that, we're building for you guys. It's you guys who keep us tapping away day and night. And across Russian and French and Chinese, a host of languages. It's just incredible to see the level of dedication and appreciation we have from you guys. And so, yeah, just massive thank you to you. And very shortly we will be, announcing some the winners of the contest, as well as the promised alpha. Le Ref, you guys at Lobis, really interesting experiment around community governance. Welcome, and it'd be amazing to hear about what's happening at Lobis.
Thank you. Can you hear me well?
Yeah, you're fine, man.
Awesome. All right, my Bluetooth speaker seems like not compatible with that space. So let's all go. So yeah, awesome to be here. Really excited. So thanks for introducing us while I was sorting out my technical difficulties. So yeah, so let's speak about Lobis. I mean, I hope that everyone on this space already knows about Lobis. That would be awesome. If not, well, I'll try to give you a quick summary. So. Well, more than anything else, I would say that Lobis is an ambition. It's the ambition that we can keep the DeFi decentralized despite the centralization threats that we're currently seeing emerging in the space. So when we look at juggernauts such as Curve and juggernauts in the making, such as Frax, Tokamak, or maybe even Olympus, sooner than we realize. We want to help the DeFi community keep ownership of these protocols and not let them fall under the control of elite that would leverage these protocols for their own benefits. And so the thing is, all of us here in the space, we and in DeFi currently, we're still early. I think we have the first mover advantage over big corporations that don't yet have either the agility or even the legal right to get their dozens of billions of dollars over to DeFi. So now is the time when we need to organize ourselves. Otherwise, I think the longer we wait, and the more likely it's going to be that we just get fucked in the end and get owned by the elite in DeFi, such as the same way as in TradFi. So that's what we try to fight for. So now, operationally speaking, we are an Olympus fork, and we are accumulating governance tokens without stealing away voting powers from investors, because that's one of the problems that other protocols have, where I mean, I won't name them, but you all know them, right? Where you can stake your governance tokens in exchange for yield, but in the process, you lose your voting power, and we don't want that to happen. So at Lobis, we want to make sure that investors not only retain their voting power when they stake, but they are even educated and encouraged to make active use of their governance power. And by owning a single token, just the Lobby token, investors get access to the governance of all the protocols that we have in our treasury. So in this sense, we are a meta governance protocol, if that makes sense to you guys.
Yeah, absolutely. It makes sense. JB, like as one of the Curve OGs, how has it been for you to see these kind of these dynamics like evolve over time, and what do you think like about the importance of Lobis?
Yeah, I think we've been talking talking a little bit about it on this call already. Is the evolution of DeFi is being moving very very fast into duplicating traditional financial features or way of how society works, and what we had before is accumulation of money, so wealth, and when we saw the introduction of VECRV, the way that you can lock assets, but at the end, this asset give you either more voting power, so then you can increase the redirection of the wealth that is being created on this protocol. This is another layer on top of wealth. It's basically by having access to voting power, by having access to those governance tokens, I'm not only able to either generate more wealth, but I'm also able to lobby or to trigger some bribing mechanism where I can decide which one of those projects in a DeFi space is acceptable, can actually be integrated inside a DeFi protocol. For example, at the beginning of this story was like Curve had a whitelist mechanism where you need to have CRV token holders that can vote and accept another protocol to come on Curve. So at the beginning there was Yearn, and then StakeDAO, and then Convex. Well, now the protocol is getting more decentralized. But the thing is, like, then those protocol, what they can do, they can build different strategies, and they can lock CRV, and then they can basically high level picture. They can get more voting power. So in principle, this is very nice because you incentivize a different project to build on top of your protocol. But indirectly, what you actually also incentivizing, which it's the future of a DAO. I mean, the DAO is to be decentralized, but you're also like losing control of your DAO. And what's happening is it's not necessarily the one that are getting more voting power on your protocol that are the one that also incentivize to continue building for your protocol in the long term. They may be short term because they're getting a lot of revenue and they're making a lot of money, but they also have their own agenda. So this kind of governance layers that is happening, we have now a lot of accumulation of tokens across different projects by different actors that are big whales and not necessarily following up the same vision as those people that are building in the core team of the protocol. So this is getting very urgent that we have projects like Lobis, for example, that the goal is to accumulate voting power across different protocols, but also at the same time build and make sure, not build, but make sure that the protocol will continue to have enough voting power on their own project so they can continue to build. And also the users that are coming and giving those governance tokens, they can still have access to the voting power of those governance tokens. Here in the example of Lobis, is through the concept of Lobis, so you can use the Lobis token to vote across the entire DeFi space. But what's coming in DeFi, it's very important, is exactly what happened to society. You had people with money before, and now you have a lot of lobby. And in politics, we usually say the governance has control of their own population, but it's not actually really true. What the ones that have control is the lobby people that have huge power, economic power. For example, maker that will say, okay, I will cut the jobs in this country if you say you don't want to accept this typical U.S. food, for example. And so the lobby is really in control of the economy of a country, and this is exactly what's happening in DeFi now. We call it curve war, but it's really more about like now getting to the next stage, which is like DeFi war. How can we accumulate voting power across all those different projects so we can guarantee that we'll be able to incentivize other projects to come, or we'll say to certain projects they're not welcome to come, and also how we can build this voting mechanism or those bribing mechanism on top of it.
And Laraf, what sort of traction are you seeing on this?
Sorry, can you repeat the question?
Yeah. What sort of traction are you guys seeing at Lobis in terms of everything that JB's just mentioned?
Well, I think we are, fully aligned on what the problem is. As he said, right now, the main advantage we have is the big money is not here yet, is not in DeFi yet. So now is our chance to act. And what we really love at Lobis is that it's not your typical, I would say, protocol that attracts only people who are just interested in making easy and fast money. What we realize and what we see emerging at Lobis is that the community is really active about governance and making sure that we, as a community, we make decisions following very absolute democracy-oriented principles, and that's something that's pretty exciting. Is that everyone who's joining Lobis so far is a builder. Everyone is excited, and it's the most active community I've ever seen. So that's something that get us really, really excited. And even in terms of partnerships, so we've been able to talk with many big names in DeFi. So not just StakeDAO, but also Frax and Tokamak and Angle. We are starting to realize that these guys, they also share the same vision. They agree that by, for instance, exchanging tokens with us at an early stage, for them, it's a way to, I would say, to secure some governance power. And have that guarantee that the tokens that they're giving us or exchanging with us, they will never fall into the hands of big money. They will remain in our treasury, controlled by the people, by our investors, and so this is a, I would say, kind of guarantee, a safety that will always be there to help them remain independent, and they are extremely receptive to that message.
Incredible. Laraf, I'd like to thank you for coming on. It's been great to, although we haven't been working with Lobis for a long time. It's a huge kind of mission around the governance, kind of realigning governance in DeFi. I think at this point, guys, it's kind of maybe time for the moment that maybe a lot of you have been waiting for. So we're actually working on something at StakeDAO to address some of these issues with governance and vote locking and everything in DeFi. JB, would you like to talk about what we're working on right now?
In which vertical? Because we're doing a lot.
The alpha.
Oh, the alpha regarding the NFTs, or the alpha regarding the governance.
Yeah, governance. What we're working on and going to be rolling out over the next few days and weeks.
Yeah, so it's called the StakeDAO locker room, and basically, without entering in too much details, it will be the first initiative in the ecosystem of DeFi to accumulate voting power across all the different projects that have VE CRV model. So basically, the first one that we're going to integrate are Frax and Angle, but also coming soon after, there will be obviously CRV, but then all the other projects that have a VCRV model. And what's really different, the key factor differentiation across other projects that are also jumping into this curve wall or DeFi walls, is that on our side, it's a liquid position of the voting power that you might receive by staking those Frax inside the locker for 4 years boost, or Angle, and then you will also receive obviously the the native API that you receive inside the vault. You will have earn the 8% or like less of fees, performance fees on top of all the activity the DAO is producing. And then you also be able to have control of your voting power. And I think this is the echo that was really trying to incentivize. The reason why first Stake DAO a year ago was started was to accumulate governance power inside Curve in order to make sure that Curve don't get control over time by big players that are not necessarily in the same vision as Curve. So the message was really clear. How can we accumulate voting power in order for us to still play a good, be a big player in the Curve protocol? And then we are like people that either executed the vision in a certain way that also on our side, then we took a different path, and now we're coming back with this called the Stake DAO locker room. That will be a room of many different projects that have the VCRV model in place, and then you'll be able to come and stake Frax, Angle, and other tokens, and then enter in this earn performance fees, earn native API of the token you're looking in, and then be able to sell your voting power, then enter bribing mechanism or all these different things, and also receive additional incentives on top of it. So that's pretty ambitious mechanism that we're building, and obviously a new token economics on top of the DAO, and some the different UI that will allow you to get into DeFi, the new world of DeFi, and not the old one like yield farming and all different things. So it's a complete new game that we're building.
Yeah, I think it's a something of a 0 to 1 invention, right, JB?
Sorry, say again.
Yeah, I mean, I think it's kind of a 0 to 1 within the space, right? Like in terms of how is this a game changer for protocols as well as users?
Yeah, so I mean, protocols they can come and also like for treasury management or whatever, they can also like come and stake inside our locker and have governance power across the DeFi. So we'll be able to have bigger API. We'll be able to have a system in place for bribing or setting voting power. So people will be able to come to stake DAO and using the SD token of the locker or the SDT, the VESDT, they will be able to have a bigger play in the DeFi space. And now this is also like cross layers. So we're also building on multiple different chains. So
yeah, sorry, you go.
No, but I'm not sure how deep we can talk about it because I think there will be a release. So, but Stake DAO locker room, the concept of having many different projects where you can lock the assets based on VCRV, a different structure, how we dynamically are able to compute the entire data on the entire project across different strategies, and also on the multiple different layers. So being able to use the bridge and being able to have an activity across the different chains. So that would be VSDT, obviously, because this is kind of like obvious, but.
VSTT is going to be one of the biggest kind of milestones, I think, to date for us. And JB has just dropped a huge amount of alpha in a couple of minutes there. So that's probably sinking in for everyone. But we can't really go into in too much detail right now. Over the coming days and weeks, like I said, we're going to be unpacking that and rolling it out. We will be releasing full info in due course. But for anyone who is kind of paying attention to some of the things JB mentioned there, we think this is a huge development for Stake DAO. The other piece of alpha that we'd like to drop is that we're going to be releasing a new batch of NFTs within the next couple of days. So obviously we've released 4 different lots to date. Between the weekly bonus rewards and the Avalanche ARB strat. So we're not going to be disclosing the power just yet, but for anyone who is currently staking in the Palace, and accumulating points, you're going to be able to put that to use for this next batch that we're going to be releasing. Like I said, within the next couple of days. Right, guys. I think it is time to announce the winners of Degenuary. So we actually have a couple to announce here. So the overall winner of Degenuary is Julian BTRD. That's all one word. That's his Twitter handle. You may or may not be on this space. So we will DM you on Twitter. You are the winner of $500 worth of strategy of your choice, as well as a common Pythia NFT. So big congrats to anyone that participated, but particularly to Julian, sorry there. It was a huge turnout for the, for all of the participation on Twitter. I think we had over 500 people, get engaged there. And the other winner we have is Martin, MartinGBZ. You are the winner of a common Pythia. So, thanks again to anyone who participated in the celebrations for our 1-year birthday. We've kind of unpacked a lot on this space. JB, would you like to kind of impart some sort of closing comments on the eve of our 1-year birthday?
I think I'm very thanks to the entire community of DeFi and all our partners, and I think over the a year is only 12 months. I know that DeFi, one day in DeFi is probably like 10 years in real life, or like an entire year. But I think what we've been doing and this is something I'm very proud of the entire team. And if you look at the platform of DAO, it's a really strong platform. We probably have the best UI, user interface, in the entire DeFi space. When we released it, was just like another level. We probably need to make a lot of effort on the user experience, trying to make sure that the different concepts that we've built are easy to understand, and then after that, easy to use. We have a different products, like we offer trading, very advanced trading, the best quotes on the market. We offer the best APY on the market. We don't offer all the strategies possible, but we guarantee that if you come to DAO, you will find the best APY for Euro, ETH, USD, or BTC. That's something we really trying to push for very hard. And then we have staking, so you can also like delegate to validators, and then you will earn. That's something we're working on with snapshotting and all different mechanisms. You will earn additional rewards. We have an entire marketplace of NFTs that they're not just JPEGs. By adding the asset to those NFTs, you can calculate, if you have them into your wallet, you can calculate how much you will what we call the extra boost. So by having those NFTs, you unlock extra boost on the top of those strategies. There's no one doing this in the entire ecosystem of DeFi. And then we have this concept of premium access to strategies using very advanced NFTs. Still, no one has came up with something like that. And then we have the referrals, so you can earn free rewards by referring people, and then we track the entire activity on the top of the DAO. I think, as mentioned, we have probably one of the best UI in the ecosystem. we need to make a lot of effort and make it way easier for people to understand how to use those products and how we can make those products very accessible to anyone. So it comes with the cross layers, with using different products without knowing that you're using bridges, without knowing that you're jumping between different chains. This is our also one priority. As I mentioned also, because it's now been a year, it's time to move to the next stage, next step of the DAO. So now we're entering the governance war. VSDT is coming, so you'll be able to lock it. Try to take a look to the price per earning of the SDT, and you will see this is like a massive opportunity. And then by having, as mentioned, the Stake DAO locker room, we've done partnership with major protocols in the ecosystem that will be able to offer those different lockers across all the projects that are building tokenomics like VCRV. And then you'll be able, by locking asset inside this locker, you will earn exactly the same rewards that you will if you were staking directly inside, for example, Angle or Frax. But you will, so we give you this plus performance fees plus additional rewards, and then on top of it SDT, and then we have so new tokenomics, jumping into the cross layers, cross chains, and then increasing our derivatives offering. So more options on more chains, and also more advanced strategies. So it can be built on using perpetuals, using futures. And then what it allows us is offering strategies that will either leverage exposition to a certain asset, hedge yourself. If you, for example, from Europe, you need to go into DeFi, you're investing in as USD, but you understand that USD is really decreasing in value against the euro, lost 25% in 1 year, 2 years. How can we build strategy that allowing people to not, they don't need to understand that they actually, by selling euro to USD, if USD had lost 25%, they actually lost money. So this is actually our goal, is to provide a platform that is easy to use and offering the best products possible to manage asset and offering the best rewards in the ecosystem across different products. And I like to thank everyone that was involved in the journey so far. When we released DAO a year ago, we said many different things. I think we respect them. We built. It's a very complex platform. We're offering many different things. We have a huge community. And what we're actually doing very well as well is a quote that I always like to say, is the more you share, the more you get. And I think we've been partnering with projects that at the beginning, they were probably a little bit struggling to get there, but they were so good that we actually worked with them. We're the first one to work with Frax, first one to work with Angle, like many different projects in the ecosystem that we truly believe will be one of the biggest protocol in the DeFi space. So what we like to do, we like to welcome anyone to work with us, but we also work with all the people that share the same vision as us of decentralizations and also governance for all, being able to not sell your voting power and earning on the top of your assets.
Thanks a lot, JB. I think just another kind of just to piggyback on what you said there. You've dropped a huge amount of alpha around the sort of the roadmap, and a part of that is that it's going to be we're going to roll this out step by step. The last year we've really worked to kind of build things right, and sometimes building things right takes a little bit longer. And as you said earlier, JB, a day in DeFi is like a year in TradFi or the real world. But yeah, thanks. A huge thanks to everyone who's
jumped on. Mentioned that. Yep. All the things that we're doing, we have a different approach now. It's everything baby steps. So we do like one thing, and then we commit, we execute, and then the next thing that we've been doing over the past few months. Yeah, obviously.
Right, and I think maybe looking from in from the outside, it can kind of seem like not a lot's happening. But I think that another thing that we do really well at StakeDAO is looking ahead and planning, 3 months, 6 months ahead of to quote, I think it's Samper and Frax, we're skating to where the puck is going to be, right? To use a sports analogy. But guys, thanks a lot for jumping on. Thanks for being here to celebrate our 1-year birthday. We're going to continue to build for the herd, for you, for everyone here. And we will be releasing a lot more info in the coming days about our new NFTs, as well as the new tokenomics that JB's been discussing. So thanks a lot, guys. And JB, thank you as well.
Thank you, guys, and thank you to the entire team. And in the herd, in the StakeDAO, and the entire verticals, we are many, many different people that have been working really, really hard. And I would like to thank them a lot, to deep of my heart, because it's been a very tough year. A lot of things happen, and we've been and also became a family. So that's the beauty of it. Like, we're working with friends now, and we're trying to build many different things in the market of DeFi, and we're having fun. So at the end of the day, we're not actually feeling like working, but we actually producing value, and at the same time we're having fun. And I think that's something very that put us very different from other projects in the ecosystem.
Thanks, JB. Well, onwards and upwards. Thanks a lot, guys. And see you online.
See you guys.